I'm delighted that our next speaker is joining us. He's thinking big about groceries, and I was reading some articles this morning. He's been described as one of the few moments of brightness in the gloom of COVID-19, which is quite a tag. He's planning to build the largest same-day delivery platform in Europe. So would you please give a big welcome to Devan Hughes of Buymie, and Devan is in conversation with our very own Niamg Sterling of HBAN. So I'll hand it over to you, Niamh.
Thanks so much, Conor. Great to have you here today. A ray of light. Devan, what a great introduction. It is fantastic. Thank you so much for taking the time to join us. I know you're really busy, so you're very welcome here this morning.
Thanks very much,
Devan. We've all read about, obviously, your great progress in the last couple of months. It's been phenomenal, really, and well-deserved. I'm just wondering, in terms of the challenges around an early stage company selling into corporates and enterprise type companies, you're small, you're early stage, but you're looking for buy-in from them. How did you manage that process with the likes of Lidl?
It's incredibly challenging when you are, as you said, a small business trying to deliver into a large, and particularly when you look at grocery is predominantly driven by large enterprise corporations. Not only the grocers themselves, but also the FMCG brands. And it is quite tough to kind of crack that mold. And to be honest, it has taken us a lot of time. Buymie has garnered a lot of attention, particularly in the last 8 months, given the current situation that the market is in. But we've been in this space for 4.5-5 years in February. And so we've had to be very patient. And we've had to really approach the market quite in a very deliberate way. If I was to give kind of key takeaways as to how we've approached engaging with large enterprises in our sector, one, absolute transparency. We focus on knowledge sharing with our enterprise partners, investors, and stakeholders in the market. We share data, we share insights, we share innovation, we share technological know-how, and we want to be seen as a really open and supportive business within the sector. One of the other things, though, and this is not to be forgotten, is that large enterprise and corporations are not famed for being the disruptors of their markets. They're not famed for being the ones that will find the newest way to approach something. And when we started, we did not ask for permission, and we decided to start our business without any enterprise or corporate involvement, and we went straight to the consumer to do that.
Yeah, absolutely. And in terms of, Michael mentioned it earlier about timing and the success. How important has it been for you to be able to capture the accelerated online and delivery due to COVID? How important has that been for you?
Really important. Timing is an incredibly important ingredient for any startup. When we launched in February 2016, I was the very first grocery delivery person for Buymie, and we were really early to the market. The first reaction we got from the market was retailers trying to sue us and shut us down. They lodged complaints with the Advertising Authority of Ireland against us. They said our business was misleading, and that we were driving no value and all the rest that goes with it. So we were totally and utterly rejected by the market that we were trying to solve for. And so if timing was ever of importance, we certainly didn't get it right when we launched. But you fast forward a year and a half, Amazon bought Whole Foods, and that had an impact on the trajectory of grocery e-commerce globally. And that really made every single major retailer and FMCG brand take a big step back and a sharp inhale of breath, because when you have an entity that is 6 times larger than the entire grocery market in Ireland, UK, all of a sudden become one of the largest grocers in the US, that kind of sets a whole new precedent. But all of those changes started to happen. Like, the online grocery market was the fastest growing channel in FMCG grocery long before COVID ever happened. And I think, only now has it come into the kind of foreground, and it's really landed in the consumer's mind about just how important this sector is. And when COVID happened, we were, in the middle of raising a round of funding. We had just raised 2.2 million, which was led by ACT Ventures. And we had to completely reevaluate our entire funding and commercial strategy, because all of a sudden, in the matter of weeks, we were trading a year ahead of our entire business plan for 2020, and we were already set up for an amazing year of growth. And so with that, we had to top up our round, and we went out and we found an incredible investor in Wheatsheaf, and they led a top up of 5.2 million in a space of a number of weeks, and that brought our funding to 8.2 million at the start of the year.
Yeah, phenomenal. And just in relation to the funding piece, because I know a lot of our audience are obviously going to be companies that might be heading towards their Series A. Scaling is incredibly expensive. All your processes change, your team, you're expanding your team. How did you manage, this can be such a challenge for first-time entrepreneurs. How did you manage your cash burn and make sure that your costs don't, particularly with this kind of a consumer-facing product like yours, how do you make sure your costs don't scale faster than your revenues?
If you are allowing your costs to scale faster than your revenues, you don't fully understand your own economic model for your business. Being profitable from the start is not the name of the game. The point of, and particularly for seed businesses to Series A, that space in between, what you're trying to do is find a repeatable business model, and you're trying to find the bottlenecks in your processes that are going to prevent you from scaling successfully. And so that's really what you spend that seed to Series A stage for. When you get to Series A, you want to have in place a couple of things. One, you want to have a clear understanding of what the economic model of your business is. You want to really understand where cost and revenue emerges, and you want to put in controls that make sure that you know that your core transaction, the primary part of your business, is predictable and forecastable. The other thing is your team. You have to put in place a team. If you're not focusing on putting in an experienced management team between seed and Series A, you're going to find yourself in a real tough spot when you go to try and raise more capital, because you just won't have the expertise, you won't have the support around the table. One of the things that I focused on prior to this latest round was bringing in a CFO. We brought in Nick Lawson. He was the former CFO for Gusto, which is a 500 million pound meal kit delivery company in the UK. He completely revamped our back-end financial reporting, because I knew I wanted to have as much granular visibility, not only on a day-by-day basis, but a weekly and monthly basis, that I could report accurately and understand what our cash runway was going to look like, so that we could plan going forward. And we're now in a position where we're trading at significant scale, and we have to be in a position to take a longer term view, not only of our business, but of the market as a whole. And so making sure that you bring in that expertise to support that is absolutely crucial.
I'm thinking about future proofing. Obviously when you're at this stage, you're going to want to be, and talk about building a scalable, sustainable business. What areas are you focusing on now that will ensure that you kind of future-proof Buymie? Because obviously you're looking to Europe, and it'd be really interesting to hear your thoughts on that.
Yeah, so what our primary focus today is really on our technology. We are a technology company, we're a data company. Everything we're the fastest and largest same-day grocery e-commerce platform in the country, but we don't own any vans, we don't hold any stock, and we don't have any warehouses. So all of our infrastructure is driven by technology. And so what we're focusing on now is actually looking at the existing last mile supply chain of the entire grocery retail market. And we're not just talking about e-commerce, we're talking about, we augment the existing retail infrastructure. And so what we're doing now is we're re-engineering a lot of the 100-year-old processes and best practices that this industry has been running with.
Yeah. Just in relation to that, like a lot of this would be kind of legacy systems that will be there that you're having to change and kind of reimagine that. How difficult has that been?
It's challenging. If you talk about coming into any 100-year-old industry, and the grocery market is, I think, 106 years old at this stage, 104 years old rather. And so it's got incredibly entrenched processes and expectations as an industry, but the world around it is changing so rapidly. And so what you really have to do, and this comes back to your original question, Niamh, it's about knowledge sharing. We proactively share information, insights, and our technology with our retail partners to show them what could be. It's the art of the possible, so to speak. And we really start to help them understand how can we adapt existing retail operations and mold them around this new opportunity, which is same-day grocery e-commerce. Our entire focus is about extending the capacity of the existing market, not building new warehouses, not buying new vans, actually using the assets that are already in the market to increase capacity, increase value, and sweat those assets harder through the use of great technological infrastructure.
Yeah, fantastic. It's fascinating. In relation to your role as CEO in Buymie, how have your short-term priorities and your goals changed as you start to scale?
It's a really good question. To be honest, I mean, I don't know how much my processes have changed. I still am very much day to day in the business. I do a shift every month on the platform. I go out and do grocery orders, and I really want to stay very as close as possible, not only to the customer experience but to the shopper experience. I think what I focused on in this, if I think about these last 18 months, whereas things have really ramped up for us, we've gone from a small 5-digit a month sales business to well into 7 figures on a monthly basis in 3 countries, and over 400 independent personal shoppers. So the business has become really large all of a sudden. And the thing I've spent most of my time on, I think particularly in the last 8 months, is around organizational planning and team building. So I've been very, very fortunate from the very beginning of Buymie to have had incredible people join me on this journey and become a part of what we're trying to achieve in the market. And that process is not going to change. And that whether that be board all the way down to our customer service team, it's really about bringing great people in. So my primary focus has been about thinking about how the organization is changing, what what processes and what reporting lines do I need to put in place to make sure that the right person is paying attention to the right thing at the right time. And I think that's where if I was to think about the one thing that has changed significantly for me in the last 18 months, it's really about spending time on the organization itself.
And obviously time is really of the essence as a CEO, right? And you're a new dad, congratulations. Only a week or so old, I believe. So no sleep had, so time is even more precious. Obviously raising funds, and you've been raising, you've just closed a round and you raised 2 rounds quite close together. What takeaways do you have for our audience here who might be looking towards that Series A, managing that time sink of raising funds but still trying to scale a business?
Sure. So funding raising is a massive time suck. And realistically, to do it well, you need to be paying attention to it, and you need to be planning ahead. So those 2 rounds that came together, people can lose context in the press quite easily. So they saw all of a sudden COVID happened and Buymie closed 8.2 million in funding. Realistically, the round for the 2.2 was in discussions in October of the year before, and we had already engaged with Wheatsheaf, who led the additional 5.2 million in July of that year before. So that long-term lead-in time is really important. The average amount of times you have to meet with a VC or an investor to get a check is about 9 to 10 times, and you need to make sure that you give yourself enough runway of time to build that relationship, cultivate that rapport, but most importantly, give the investor time to see the business mature. We will be fundraising in the future, and I can guarantee you that the investors that come in that, I've probably already met them and I've probably already pitched them. It's a fact that they've probably looked at our numbers 12 months ago and they said no, but what that really meant was just not yet. And so, my goal would be to go back to them, show them where we were when we last met and how far we've come since then. And that's really a part of that process. You need to cultivate long-term relationships. And a perfect example of this actually is, that 2.2 million was led by Act Ventures, and Sure Valley Ventures also was involved, a really great fund. And they were the first 2 VCs I ever met. And I met them back in 2016. And I maintained the relationship with them, kept them up to date. And eventually, they led a very large round for us. So it really is a long-term game that you have to take when looking at fundraising and looking at a funding strategy. But the one thing I would say is that fundraising is not your business. The funding will come from excellent execution. And so again, back to bringing the right people into the business at the right time is a critical factor. I would not be able to step away from the business day to day if I didn't have the right people there to make sure that it was doing what it needed to do when I wasn't. And I could then focus my time and energy on fundraising when I needed to do that. You cannot go and do that if you don't have the right people looking at your business when you're not there.
Yeah. Absolutely. We have a question in from the audience on timing. What if you were the second to market with a new concept that is very good timing economically? So if you're second to the market, somebody else is already doing it.
I don't believe in this, first mover advantage thing. I don't believe in it at all. I actually, everybody, not everybody, sorry, that's a generalization, but a lot of people may have the misconception that an idea is a passport to worldly wealth. The fact that it is just not. It is all about execution. But Buymie is not the first of its kind around the world. First of our kind in Ireland for sure, but not the first of our kind globally.
Yeah, in the US.
Exactly, yeah. And I've developed a PhD in my competitors. I know the ins and outs of every other business that's doing something similar to mine around the world. And so I think that's the opportunity for anyone coming to market second, is that you can look at what someone else has done and look for ways in which they may have missed a trick or they could have avoided something earlier. And that's your advantage. You have a playbook that someone's already carved a little bit of a track for you, and you can understand where you can make better decisions. And I'm a firm believer that it's all down to execution. Idea means nothing.
Yeah, and it's about the kind. You're sort of, if somebody's been there before you and they've tread the path, you're not having to. I mean, we talked about it earlier. Like, you're kind of educating the market as you go, so there's less of that to do, but you're also able to hone your value proposition based on what's been before, right?
Absolutely, yeah. I mean, you're going to, there's going to be a level of education out there already in the market. I'll give you a perfect example. I knew that our uptake of our service would be really effective because the likes of Deliveroo, the likes of Uber, the likes of Halo had already educated the consumers on what it was like to garner services via an application on a mobile phone. And so I knew that there wasn't going to be a huge amount of consumer education in that part, where I knew I had to very quickly, when I realized that we had our retail, possible partners trying to sue us, I knew very quickly that I was going to have to spend my time actually knowledge sharing and educating the industry itself about what we were trying to do and what our mission was within the market. And so the consumers were never a problem for us, but each business is going to have to face its own individual nuance, and it's going to have to find out where it needs to spend time educating. But yeah, if someone has come before you, there's going to be natural education already out there that's going to give you a head start.
Devan, we have another question in there. Thank you for that. Just in relation to circular economy, and I think we've touched on this previously when we were doing funding. Have you thought about incorporating a circular economy model whereby the bags that the food are delivered in get reused, or you switch to cardboard boxes that supermarkets have in abundance? I'm only asking because I use the service a lot, which is great, and have more bags than required. I could probably sell them myself, so I understand that point.
I'm thrilled with that question, and it gives me an opportunity to address something that's very close to us. Like, our mission is sustainability. Everything that we do as a business is to drive more efficiency and sustainability for the grocery, FMCG market, and particularly in last mile. We never used plastic bags up until March of this year. We had all reusable bags. Our shoppers used canvas bags and insulated chiller bags to deliver goods, and customers empty the bags themselves. With COVID, we had to adapt our business very quickly. And we were the first food platform in Ireland to introduce contactless delivery. And we did that because we realized the implications of COVID and the risks to community transmission that were at play. In fact, I wrote a white paper to government the day they announced the public closures of the offices and schools, particularly around grocery and the impact that could have on community transmission. So, we were really ahead of that. But the challenge that we have now is that, we've been waiting to see how this health crisis matures, and it's not going anywhere anytime soon. So up until now, we've still had to use the plastic bags as a means of keeping both our shoppers and our customers safe. But our team are actively working on a number of trials at the moment, a number of pilot ideas at the moment that we're going to be doing to roll out reusable bags and offerings for consumers and for personal shoppers. One of the reasons we were able to raise capital from the likes of Wheatsheaf, Wheatsheaf is a sustainability impact fund for the food supply chain market. So, having a focus on sustainability is one of the reasons we were able to unlock that capital. And so we have a direct stakeholder obligation and commitment to removing single-use plastic as much as possible from our supply chain. So you have my commitment from that as a customer, delighted to hear, but you have my personal commitment that that's something that we're actively working on.
That's super. Thank you so much for sharing that with us. One more question here. Was there one key thing that you learned from the US and UK markets, and I know your phenomenal research on this, that you felt wouldn't work in the Irish market? Very interesting question.
That is an interesting question, and broad. Not particularly. if for this specific business and this specific concept that we've rolled out, there hasn't been a huge amount that we haven't been able to apply. But the one difference between the US and UK, Ireland, and Europe as broad is that the e-commerce market in the US was far less mature than it was in Europe. In Europe, we've had online grocery for 2 and a bit decades. In fact, the grocery retailers in the UK and Ireland, they took the web van model. And if anyone knows of their is brushed up on their .com history, you'll know that the first big online grocery play in the US was Webvan, which ultimately raised a huge amount of capital, went public, and ultimately went bust, because the model wasn't scalable, and it just ate losses. That model actually has been adopted by the grocery retail market in Europe and has been running for 2+ decades. And the losses, when I entered this space, the losses were £500 million a year, negative P&L impact for the entire market aggregate, for UK and Ireland alone. And so we had a fully dysfunctional market. But when you look at the US, one of the businesses that inspired me and Buymie was Instacart. And Instacart now has actually leapfrogged. It has allowed US to leapfrog Europe in online grocery fulfillment. And it's one of the fastest growing businesses and one of the fastest growing channels in the US. And that's where I would say is one difference that we had, is that, we've had to come in and spend a lot more time educating our potential partners and future partners about what we're trying to achieve and what our business looks like, because they've been running with a specific model for a very long time.
Let me just maybe summarize, and Michael Culligan, I might come to you in a moment and ask you maybe to come back in, but I love the piece that Devan had there, a PhD in my competitors. That's such a lovely phrase. He also talked about the economic model, understanding your economic model. He talked about execution, he talked about the team, and he talked about metrics. And I just think that's kind of just a super story. What's your take on it, Michael?
Yeah, listen, privileged to just hear Devan there. Pity he's gone off. He seems to have dropped off temporarily, or a pity, because some of us, Devan, can remember the .com. We don't have to go to a history lesson. We were around long enough. And what's really encouraging watching Devan there, first of all, is such a wise head on relatively young shoulders. And the different things that I would call out there from listening to Devan: resilience, as always, being rejected by the very market he was going after, going 4.5 to 5 years before the market timing opportunity came along. The clarity of thought and vision for his what he's about. Now he's building the management team, which is essential for scaling, and he understands that. Devan has been selected as in the shortlist of the Ernst & Young Emerging Entrepreneur of the Year, which is just fantastic for someone that is a relatively short number of years in business. And for me, and I'm glad to have the opportunity to say this, Devan is emblematic of a new confidence in the entrepreneurial area in Ireland. So we've come such a long way in the last 20 years in that regard, and there are a range of exemplars around. Now we have a long way further to go, because the bar gets raised higher around the world. But I've been privileged to be involved in the entrepreneurial area for the last 10+ years, and I have to say, notwithstanding the current pandemic, which will pass, I feel enormously positive about these new, young, experienced entrepreneurs who I think can create economic wealth for Ireland and really help us going forward. So I just want to say well done to Devan, and he's an exemplar and shows many of the underlying traits that are essential for success in entrepreneurship. Good luck to him.
Thanks very much, Michael. And so thank you to Niamh, super backdrop Niamh, which are Gladiator, very appropriate. We like that. Thank you to Devan, and many congratulations on your new arrival and on your success in the business, and continued success as you move on.